Much. Morning, everyone. How's everyone doing? Yeah. All right. I love it. What a nice reception on a Saturday. Yeah, as mentioned, Matt Hougan, Chief Investment Officer of Bitwise. Bitwise is a specialist crypto asset manager. Been in the market since 2017. We manage about $12 billion on behalf of investors in the crypto market. And I really want to focus on this question to start. Why does Bitcoin have any value? But to know whether I'm walking into the lion's den, I want to see a show of hands. How many people think Bitcoin is great and own it and think it's going up in the future? Oh, wow, we got a lot of hands. How many people think it's terrible and going to zero? The worst thing since sliced bread. We have one honest man in the room. That's beautiful. I thought I would start with this question because I get this question a lot. Why does Bitcoin have any value? And I would start with some of the sagest words from my favorite investors. If you want to know what your father sends you when you leave ETFs to join a crypto startup, this is what he sends you. Bitcoin is rat poison squared. Warren Buffett didn't like Bitcoin because it doesn't have cash flow. This trips people up. How does Bitcoin have value when it doesn't have cash flow? And I have a simple way of thinking about it, which is to think of Bitcoin as providing a service. The service Bitcoin provides is the ability to store wealth in a digital format without relying on a bank. And there are evidently 50 people in this room that want that service. There are 100 million people around the world that want that service. When you think of it as a service, its value doesn't seem so unusual. We're used to companies providing services. Microsoft provides a service, Microsoft Word, Microsoft Excel. When more people want to use Microsoft's service, people buy those software and the price of the stock goes up. Bitcoin provides a service, the ability to store wealth in a digital format without a bank. When more people want that service, guess what? The price of Bitcoin goes up. The only difference is there's a Microsoft company that you can pay a subscription fee to get Microsoft service. There's no Bitcoin company. You can't pay a subscription fee to Bitcoin to get the service. The only way you can get the service Bitcoin provides, which is storing wealth in a digital format without relying on a government or a bank, is buying Bitcoin. But it's really no different from any other service providing company. Now, usually when I say that, people point to charts like this and says, you know, Matt, this is a terrible way to store value. Look at all these downturns. Look at your gray hair. We're seeing 60%, 50%, 40%, 30%, 20%. But the secret of this chart is that's actually not a chart of Bitcoin. That's a chart of gold since the 1970s. We have this mythical idea that gold is not volatile, has never been volatile. The reality is, gold protects your value over long periods of time. And it's done a great job of that for 5,000 years. But when we zero in on any specific moment in time, you get things like that 65% plus drawdown post-Reagan or the 45% plus drawdown post-2010. So we have this mythical conception. And when you look at Bitwise, at Bitcoin from this perspective, and you think about what's happened since COVID, the US dollar has lost about 29% of its value, and Bitcoin is 30x'd. I would say that that is a pretty good way of storing value. So at Bitwise, you know, we actually think Bitcoin is better than gold. I'm not going to dwell too long on that because we only have 25 minutes. But I do want to focus on this question, which is, what should the price of Bitcoin be? How can you value Bitcoin? Because that's what you all want to know. I've worked in the crypto industry for 7 years. I wrote the CFA's Guide to Crypto. That's a credentialing institute in finance. And I will tell you that crypto analysts are absolutely terrible at valuing Bitcoin. They put up these ridiculous ideas. If you're a Bitcoiner, you may know of the stock to flow model. That is a theory in Bitcoin that the value of Bitcoin is related to how much new Bitcoin is produced. This would argue that the price of Bitcoin will go up forever. And I'm bullish, but I'm not that bullish. There's also this Metcalfe law argument that the price is a square of the number of participants. That would also argue it goes up forever. There's even this rainbow chart, which postulates that the price of Bitcoin bounces between purple and red, which is a terrible way to run your financial analysis. I've pointed this out to people that rainbows go up and come back down, but Bitcoiners don't like to think about that. But it's a really bad argument. The actual answer on Bitcoin is the price of Bitcoin is set by supply and demand. The criticism that Warren Buffett has that Bitcoin produces no cash flow is the key to understanding Bitcoin. The price is set by supply and demand. And so I just want to give you a view on why I think Bitcoin is exquisitely well positioned right now and will have an incredible year in the rest of this year by looking at these two features. So let's talk about supply. Many of you know that the amount of new Bitcoin coming into the world falls in half every year. This is a chart of the daily issuance of Bitcoin. Right now, about 450 Bitcoin get produced every day. That means programmatically, and people who work in finance know that compliance departments and legal organizations don't let you guarantee anything, but they will let me guarantee this. The Bitcoin network will produce about 164,000 Bitcoin this year. That's all of the supply. That's all it will produce. It doesn't matter if we want more. It's a math-based system. We're going to produce 164,000 Bitcoin. And so why am I bullish? Well, when I look at demand, there are three big drivers of demand. We were just talking about ETFs. They're ETFs for anything. The Bitcoin ETFs launched in January of 2024. They're the most successful ETF launch of all time. I was the CEO of ETF.com. I worked in ETFs for 15 years. I saw over 7,000 ETFs launch. Bitcoin ETFs are the most successful ETF launch of all time, not by a little bit, but by a factor of 6. The second most successful was the NASDAQ 100 Qs. They pulled in $6 billion in their first year. Bitcoin ETFs pulled in $36 billion. They've pulled in almost $7 billion so far this year. Last year, Bitcoin ETFs purchased 572,000 Bitcoin. Now it's Saturday, so we're all still waking up, but 572,000 Bitcoin is more than 164,000 Bitcoin. In other words, ETFs bought more than 100% of all the new supply. And what history of ETFs tell us is that the amount of AUM in an ETF tends to grow over time. The first year is usually the weakest year. This is a chart of the AUM in gold ETFs since they launched in 2004. And you can see that gold ETFs had a good first year. They attracted $3 billion in assets, but they did more in year 2 and more in year 3 and more in year 4. We're here in Bitcoin ETF land, and I think we will see more inflows into Bitcoin ETFs this year than we did last year. In fact, our prediction is we'll see about $50 billion in inflows. The next thing is corporations. ETFs aren't the only thing buying a lot of Bitcoin. Firms like MicroStrategy, Marathon, Tesla, Coinbase, Block, etc., are also buying a lot of Bitcoin. MicroStrategy, or Strategy as it's called today, gets the headlines, but there are actually over 90 publicly traded companies that own Bitcoin on their balance sheet today. And how much Bitcoin? Well, let me fast forward here. This is the amount of Bitcoin they hold. They bought 320,000 Bitcoin last year in 2024, which is an incredible amount. Again, 320,000 Bitcoin is more than 164,000 Bitcoin. So again, we have ETFs buying more than 100% of the supply. We have publicly traded companies buying more than 100% of the new supply. It's a supply and demand game. In fact, so far this year, just through today, publicly traded companies have bought 180,000 Bitcoin. Again, they've bought more than 100% of all the new supply. The third source is really governments. People don't think about this, but there are over, actually it's a dozen governments that own Bitcoin today, including the US. As a US citizen, you have a share in the US Strategic Bitcoin Reserve, which was created a few months ago. Every American owns $47 of Bitcoin, give or take, because the US government owns almost 200,000 Bitcoin. This was the Trump executive order that called for the creation of a US Strategic Bitcoin Reserve, and nearly every state has its own initiative to allow states to buy Bitcoin. We're seeing it around the world. There's the Czech Republic, Brazil, Japan. I think it's over 50 countries that are considering this. Bitwise is consulting with multiple sovereign nations about building their own Bitcoin reserves. There's a tweet from our CEO about that. And we think the number of countries holding Bitcoin will double in 2025 as well. So that brings me basically to this slide, and then I'll close with a quick story and move into questions. If you look at the supply-demand characteristics of Bitcoin right now, I hate to be really simple, but the amount of new Bitcoin being produced next year is 164,250. And we think ETFs will buy 500,000, corporations will buy 350,000, and governments will buy somewhere between 0 and 2 million Bitcoin. So far, on a year-to-date basis, through March 6th, this is what's happened. There's been 57,000 new Bitcoin produced. ETFs have bought all of it, and then corporations have bought another 3x. And I think governments have bought about 40,000 Bitcoin as well. So what does that mean for price? Price rules everything is exactly right, and we heard that in the last presentation. Here's a chart of Bitcoin's price since the ETFs launched in January 2024. And I think it tells you everything you need to know about what's happening in this market. I just made the case that there is a structural mismatch between the demand and supply. New sources of demand are buying more than 100% of the supply. And what that means is existing people who already own Bitcoin have to sell it. And they're only willing to sell it at certain prices. So what have we seen? As soon as the ETF launched, the price ran up from 45K to 72K. And then it traded sideways for about 6 months. Why did it stop at 72K? Because 72K was the previous all-time high. And people are people, and there were people who were willing to sell at the previous all-time high. So remember, people have to sell because there is incessant demand from ETFs, corporations, and governments. So it hovered around 72K while people were willing to sell at that all-time high. And then it broke. And look what happened when it broke above 72K. It ran straight to 100. Why did it run to 100 and then stop there? Why is it $103,000 today? Because people are people, and $100,000 is a nice round number. And there are people who are willing to sell at $100,000. When we look underneath the surface and we look at the source of that selling, there are two sources. One is retail investors who have been willing to sell at $100,000 because it's a nice round number. And the second is a few estates, Mt. Gox and FTX, which released about 100,000 Bitcoin, and that now no longer exists. My thesis, and I could be wrong, is that as long as we have this incessant demand from ETFs, companies, and governments that are buying more than 100% of the supply, we will eventually exhaust the people who are willing to sell at $100,000. And when we do, I would ask you where it stops. I don't know where it stops. Our prediction at Bitwise is it ends the year at 200,000. That could be wrong, but 200,000 is the next nice round number. And I do think Bitcoin really is as simple as this. We'll move into Q&A, but I'll end with the story because the setup was I told you how Bitcoin has been de-risked, but I really felt that supply-demand story was worth noting. Everyone missed Bitcoin. You shouldn't feel bad. The first time I heard about Bitcoin, I was running ETF.com. I had 8 young CFA analysts between the age of 22 and 27 years old. We had a weekly meeting on the hottest topic, and our analysts could present whatever they wanted to. Each analyst took a turn each week. In February of 2011, Bitcoin crossed $1 for the first time. It was called Dollar Parity Day. And my team led an hour-long session on what Bitcoin was. And the person who led that session now lives in a very nice house in Santa Barbara. I left that room and didn't buy any Bitcoin because I had to get on with my day. And it's easy to beat yourself up for doing that. But the reality was, in February 2011, there was a huge number of risks in the Bitcoin market. There was technical risks. This was a new technology. We didn't know if it would work. There were trading risks. Literally, the largest exchange at the time was a PayPal address that you would send money to, and they would send you Bitcoin in 48 hours. I looked at the terms of service for that. You can find it on the internet. It's called New Liberty Standard. It says this may be legal as far as I know. The largest custodian in the world was Mt. Gox, which collapsed a few years later. The government didn't like it. Regulators didn't like it. There were a huge number of risks. The reality is that Bitcoin has changed today, right? Bitcoin today is custodied at firms like Fidelity. Charles Schwab is turning on Bitcoin exposure. The US government has Bitcoin exposure. 9 of the 10 largest hedge funds in the world own Bitcoin. Emory University owns Bitcoin. MIT owns Bitcoin. Stan Druckenmiller owns Bitcoin. Ray Dalio owns Bitcoin. BlackRock has a $70 billion Bitcoin business. Bitcoin has been substantially de-risked. And you don't have to feel bad that you missed it back when it was $1. Everyone did, and they did because there were real risks in the market. But a lot of that has been de-risked. We just mentioned you can buy catastrophe bonds in an ETF. You can buy Bitcoin in one of 10 ETFs. Of course, mine is the best. But you can buy it in one of 10 high-quality ETFs. It's been substantially de-risked. But there is this structural mismatch between supply and demand. When you look at Bitcoin and you wonder what the price is doing, don't pay attention to all the Bitcoin talking heads. Just remember it's supply and demand, and we know the supply. So the only question is, will this demand from institutions, corporations, and governments continue? And I at least suspect that it will. And with that, I'll answer any question you have about Bitcoin. Or crypto. Yeah, we have a question over there.
Do you think Ethereum, Solana, Ripple, Cardano will be as successful as Bitcoin?
Oh, great.
Or do you think Ethereum will be in future the next Bitcoin?
Great question. I'm going to do 60 seconds to get everyone in the room up to speed on what the difference is, and then I'll answer your question. This drives people crazy. There's 17,000 cryptocurrencies in the world, which sounds ridiculous and is ridiculous. But I want you to not think of them as cryptocurrencies. I want you to think of them as crypto assets or even software companies. The reality is that every crypto asset is two things. There's Bitcoin, the asset, on Bitcoin, the blockchain. There's Ethereum, which is the second largest crypto asset, on Ethereum, the blockchain. And the blockchains are just pieces of software. And you can make a piece of software good at different things, right? Microsoft Word is a piece of software, and Salesforce is a piece of software, and Zoom is a piece of software. They all do different things. And the same is true as crypto. So Bitcoin, as a piece of software, what it's designed to be good at is storing wealth. That means it's a very conservative piece of software. It almost never upgrades, because if you upgrade, you introduce new risk. It's a very decentralized piece of software. It's operated by hundreds of thousands of people. It changes very slow. All it's good at is storing wealth. In fact, it's a limited piece of software. You can only send Bitcoin, receive Bitcoin, hold Bitcoin, destroy Bitcoin. It's like a calculator. Ethereum was developed after Bitcoin, and it looked at Bitcoin and said, it's amazing. You can store wealth without a bank. You can move money at the speed of light. What if we could program your money to act like the New York Stock Exchange, or program your money to act like a lending agent at a bank, or program your money to act like the Visa network? And so the Ethereum programming language is way more complex than Bitcoin. And it updates all the time. It does like 2 major upgrades a year at this point. I raise all that to say, it's never going to be as good at Bitcoin at being digital gold, because it's not as good at storing wealth. But there's this whole other world of crypto, of things you can do on a blockchain that it's way better than Bitcoin at. So what we're seeing is firms like BlackRock are issuing money market funds, not on Bitcoin because they can't, but on Ethereum. What we're seeing is stocks and dollar payments. All of that is moving into Ethereum. I raise all that to say they do different things. I suspect in the future, Bitcoin will be like digital gold, a way to store wealth. And Ethereum will be sort of the foundation of a new internet. And then these other assets, you mentioned Solana, you mentioned Ripple, you mentioned Cardano, they're all competing to disrupt either Bitcoin or Ethereum, the 2 big use cases in crypto. The way I invest most of my money is in our index fund, because it's really hard to know who will win. I can make a case that Ethereum will win. I can make a case that Solana will win. I don't know. So I just own the space. I came of age investing in the internet bubble, and the lesson there was just own the market. But that's a long-winded way of saying I think there'll be multiple winners in multiple use cases, and you'll have to ask someone smarter than me which one you should buy.
Hi, Matt. It seems people have the alternatives between the ETFs, which is relatively safe, or to own it via Coinbase, or buy the Bitcoin and store it in cold storage.
Yeah.
But it seems that the BlackRock and Bitwise, correct me if I'm wrong, I think 90% or 100% of your ownership is in the custody of Coinbase. Do you own Bitcoin in any other form outside Coinbase, in your own version of cold storage? And is there I know Coinbase, there is some sort of insurance for the retailers up to a certain level, but isn't there the idea of placing most of your eggs in the Coinbase basket? And maybe Coinbase is a great stock.
Yeah. A fantastic question. So I would actually say I would break apart. There are three ways to own Bitcoin. You can own it in your own hardware wallet or true cold storage. You can self-sovereignly own Bitcoin on Ledger or whatever. You can own it on an exchange like Coinbase, or you can own it through an ETF. And my view is that the ETF or the self-custody are the two good choices, and the exchange is the bad choice. And the reason I say that is even though our custodian is Coinbase, it's actually Coinbase Custody, which is a separate legal entity from Coinbase, the app. And the way the Bitcoin is stored in the two is completely different. When you have an app like Coinbase, much of your Bitcoin is held in a hot wallet connected to the internet, exposed to risk, and subject to the risk of Coinbase, the entity. Coinbase Institutional is a separate legal entity, bankruptcy remote, where our assets are held in 100% cold storage on your behalf. And so even if something happens to Coinbase, the company you think of in the app on your phone, nothing will happen to Coinbase Institutional because it's a completely different company and it's always held in 100% cold storage. So I think those two are valid. The thing in the middle is terrible, and the only money I keep on an exchange is like fantasy football fees because there's too much risk. So real money should be kept in cold storage. I love people who do it from a self-custody perspective, and if you have clean security hygiene, that's the OG way. I think everyone should do it. I think everyone should try it. But for many people, it's just safer and more secure and simple to be on this side. So yeah, nothing in the middle of the road but dead armadillos. Yeah.
Hi, Matt. Given all the demand you just outlined for Bitcoin that you see, and then your target for end of year,
Yeah.
what do you think is most likely in terms of the way it gets there, right? Are we going to see these Omega candles where Bitcoin goes from 100 to 125 overnight?
Yes.
Or what do you think about that?
Yeah, I think that's exactly right. I think they're air gaps because I do think the selling is behaviorally driven. I think that's the only rational explanation for why it's essentially treaded sideways and then ripped and treaded sideways, 72K and 100K. So I think it's behaviorally driven. What that means to me is once it releases its tether, which is an unfortunate word in crypto, once it releases its connection to 100K and it gets above that gravity, I do think it probably rips up to like 125K. So I think it's going to be a punctuated equilibrium of fast moves and sideways movements as it sort of burns through these behavioral reserves. Yeah, I guess that's my answer.
Hey, what would you do in the event of EMP or, just like Spain just had a blackout. So
Yeah.
what do you do in the event of, in situations like that? And I want to know, do you have any? Do you own any metals in your portfolio?
Do I own any metals in my portfolio? I love gold, and I don't own it. I think people who should own gold. I'm a big fan of gold. I think Bitcoin is just a more efficient way to gain that exposure. But I understand your point. In the event that the internet goes out, you can't access your Bitcoin. That's just true, and that is a risk. It doesn't go away. Once the internet comes back, your Bitcoin is still there and the network will restart, and it would have to be a global network outage for that to happen. But yeah, in the event of that, I would just sit tight and stay in my basement with beans and guns.
I'm the skeptic.
I love it.
So Bitcoin is going to be produced or mined, and finally there's going to be a final figure,
Yeah,
correct?
correct.
So, but there's going to be this network.
Yep,
Who the hell's going to finance this network
yeah.
when there's no more coins to be sold?
It's a great question, and I have a great answer. Yeah, the way Bitcoin works, we start at 0, it gets to 21 million. It gets to 21 million in 2140, so a long time from now. But it's a good question to ask what happens, and here's what happens. The Bitcoin network processes transactions the same way a bank does, and it processes them in blocks. That's what blockchain comes from. The blocks are blocks of transactions. And those blocks can only hold a certain number of transactions, let's say 10,000. That's not the actual number, but let's use that number. They can hold 10,000 transactions. What if, and they settle every 10 minutes, give or take. What if in 10 minutes, 11,000 people want to send Bitcoin? The way you make sure that your transaction jumps to the front of the line and is settled by the miners that maintain the network is you attach a tip to your transaction. Send my 1.2 Bitcoin to Johnny, and here's an extra $20 to make sure you do my block instead of someone else's. And so the expectation, the design of the software is that over time, this tip revenue, as the network becomes more used, this tip revenue will come to replace the issuance of new Bitcoin, which has a lot of names, including, funnily enough, the Coinbase reward. That's where that name comes from. So the issuance of new Bitcoin that currently compensates miners. The idea is over time, it'll be all tip revenue and no Coinbase reward. Right now, it's like 90% Coinbase reward and 10% tip revenue. But the idea is that will switch over the next 120 years. Good question. Yep.
We have one more here, and then we'll have a panel, so we'll have a chance to ask.
All right. One more, and then I'll be around.
Do you think cryptocurrencies are going to be regulated at some point? And if that happens, what's going to happen with the price of Bitcoin?
Yeah. Yes, absolutely. So they've been moving on a path from not regulated to regulated, and they've already made a great deal of progress. I think we'll get crypto market regulation or legislation through the US Congress this year. And I think it'll be great for the value of cryptocurrencies. When I talk to institutional investors, the number one thing that prevents them from allocating is not volatility or concerns about price or environmental impact or technology risk. It's always regulatory risk, right? People don't want to take on regulatory risk, and that's kept more people out of the crypto market than anything else. So I think if we get legislation passed this year, which I am hopeful, but Washington being Washington, you never know, I think it'll unlock significant institutional flows into crypto. But I really appreciate all the questions. I'll be around for a panel later. Thank you very much.